Welcome back to another Stock Market Open live stream. Today, we get to, what do we get to talk about? Well, we get to see what the heck is going on with El Marquette. Looks like El Marquette is a little upsetty doodle in the pre-market, probably because of the fact that we've got good old J-Pow coming up with the little rug of the tugs. Yeah, that's at least what we're expecting. We've got the Q sitting over here, and we are down at the moment 75 basis points in the Qs. Yesterday, keep in mind, we were down about 24 basis points on the Qs when the post-market closed at about 5. It might have been like 27 basis points, but it was right around there. So we did move down from about 75 bips, or sorry, from about 27 bips to 75 to the downside now. We can see most of that movement has occurred since 4 a.m. We did actually, for a moment there, have a little bit of a rally. And you can see that. You probably almost went positive right here. But it's been straight down since about 4:51, which has actually only been about the last 30 or so minutes. Oh, well, sorry, actually, this is 3 hours and 30 minutes because this shows up on East Coast time. So the last about 3.5 hours been relatively rotating down. So you've got Tesla's down about 165. You've got Bitcoin. This is probably the bigger story right here. So yesterday, if you watched my Tesla BTC, my Tesla fundamental analysis video that I posted last night, it was posted pretty late, so I don't blame you if you didn't watch it, but I encourage you to check it out. Anyway, I posted a video and I touched on how this was problematic. So you can see right here, this downtrend and this rejection at the 69. I personally saw these as quite problematic, as well as this downtrend we were on over the last few days. And I thought that leading into J-Pow, there was a likelihood of a risk sell-off that would accelerate. And as we've seen over the last about 12, well, probably 9 hours or 8 hours or whatever since I posted that video, that sell-off has continued. This is on the hour chart. This is on the 30-minute chart. See, even on the 30-minute chart, you're pretty much straight down. The 5-minute chart shows you a little bit more volatility, but the trend is very clear. So, not so great. But we'll see if this is all because of the tuggin' or something else. Now, remember, you can make money going up, you can make money going down, or you can hodl and, I guess, watch. So I think there are ways to play a Bitcoin potential move to the downside. And I think the way to almost hedge this is you want to look at a few different plays to potentially short as the market goes down. I think one of the big ones, obviously, we could look at is coin. I want to see how coin is doing in the pre-market. Yeah, 5.8%. That's a pretty big, obvious one. You've got other Bitcoin plays. I wonder how the miners are doing right now. Let's see. I'm going to look at like Hut. Yep. Hut's down another 5%. Now, something that's cool about some of these other plays, sometimes you can get better options pricing on some of the smaller ones because they may have a different set of volatility. However, the downside that you have to always be aware of is the potential for a lack of liquidity when you're trying to buy or you're trying to sell your options. So do check the open interest as well when you're taking a peek at what you want to play. Okay, so let's see here. Okay, let's do this. Okay, let's see. This morning, wait a sec. Hold on, we just got data out of Canada. We also just got housing starts 10 seconds ago. Housing starts come in at 1521 versus 1440,000. Building permits 1518, so both of those beat. On a month-over-month basis, both of them beat as well. 10.7% on housing starts, 1.9% on building permits. And then it looks like we also had upwards revisions to the prior building starts and permits numbers. So more construction for housing. That makes a lot of sense. All right. So let's go to Canada. What just came out of Canada? Okay, the Canadian numbers are actually pretty good. I don't know how much Canadian inflation is really going to impact us. Well, it looks like you get a teeny tiny little green candle after the Canadian inflation numbers here. Canada CPI non-seasonally adjusted comes in at 0.3 versus the expected 0.6. CPI year over year comes in at 2.8 versus 3.1. And CPI core median year over year 3.1 versus 3.3. So some enthusiasm there around Canada's moves. They're just reporting real estate, but that's a little boring. But let's listen to it for a moment.
With more. So what about it, Diana?
Well, Joe, I think it's like Steve said, this is a really nice bounce back in February. We did have weather-related issues, and I think that's why you saw Northeast and parts of the West have a difficult time with the starts. They are seasonally adjusted, though. What I will say, though, is that the single-family starts, which is what we're really watching because that's where we have the supply problem, they were up nearly 12% month-to-month on starts and up 35% year-over-year. Multifamily, we're not looking for so much more construction because we already have an oversupply of that. But when you talk about the mortgage rates, which Steve was bringing up, mortgage rates did pop up a bit in February off of their lows that we saw in December and January. We were back up around 7% in February. But when you talk to the builders, you talk to Lennar, you talk to, any of them who have reported recent earnings and have seen what they're seeing now, it's that they're buying down the mortgage rates into the 5% range. So they're able to get buyers in the door. They also say there continues to be very strong demand. We saw that in the builder sentiment number, which jumped back into positive territory in March. And that was the first time that happened since July. The builders are reporting that they are seeing more buyer traffic. They're getting more contracts. And they say that demand was, quote, brisk. That was according to the NAHB yesterday. So it's just a question of can you get the buyers in at a rate that's acceptable and affordable to them? And apparently the builders are able to do that when they buy them down to that 5% rate. And so you're seeing that in the starts because, again, we have a spring market now starting on the existing side and still very little supply on the affordable side for existing homes, and the builders are benefiting from that. Joe?
Okay, great. Thanks, Diana.
Our next guest is here to weigh in on the recent blockbuster legal settlement by the National Association of Realtors. If approved by a federal court, that deal would eliminate the industry standard 6% sales commission and put money back in the pockets of home sellers. Joining us right now is real estate broker.
Yeah, keep in mind, I've already made a video on this. Jay, you can check that out. Hey, I've met this guy in person before.
This means.
Let's see what his opinion is, how it differs from mine.
We spent a lot more time trying to analyze it. What do you think happened here?
It can be very confusing. The lawsuit alleged that the National Association of Realtors, real estate brokerages, and local MLSs conspired to obligate a seller to pay a buyer's agent's commission. And what the settlement does is it really acknowledges that the traditional brokerage model has to change. And I think we all agree that there should be a free market conversation around compensation. And so what will happen starting this summer, nothing changes for right now around the country, but what will happen starting this summer is that buyers and buyers agents, if they elect to use one, and sellers agents, should they elect to use one, because you're not obligated to use a real estate agent in the United States, and you're not obligated to pay 6%, 10%, or 1%. Right? Those fees are what the market has commanded for decades.
It's kind of standard, and it's standard because people don't buy homes every day. So by the time you figure out what's happening.
That phrase standard is a big contention, by the way. It should not be deemed as standard. It is negotiable.
Other times where I have not.
Sure.
And it's not easy to figure out or to negotiate on the ends. If everybody thinks that this is the way it should be done, why did it take a lawsuit to get us there?
Oh, I am all for market transparency. And what frustrates me the most, just kind of to what you're saying right now, is that the old guard in this business has spent so much time, so much money on lawsuits just like this, defending where they've been instead of trying to build to where we're going. I think what happens now is new business models. I think there's new opportunity.
What do those models look like? What happens?
I think there's going to be greater versatility in how you work with your agents. And what's interesting for me is if you look at over the past 10 years, regardless of this lawsuit, all of the new technology, artificial intelligence, websites, iBuying, Zillow, et cetera, humans buying and selling homes have actually elected to use realtors more because it's so complicated. You don't know where to start.
Well, I have to say part of it is a tight market. If you're in a tight market right now trying to find a house, by the time it's on Zillow, it's gone. So I think that
Becky, that's not how real estate works.
Market where houses are moving quickly. You need a broker if you are moving to an area that you're unfamiliar with. You need a broker if you're a first-time home buyer and you don't know the risks that are associated.
Yeah, first-time home buyers get screwed here.
You can and can't ask for along those lines.
Correct. And what you'll have now is greater transparency, which I am a massive, massive proponent for. It's one of the reasons I started my own company. I looked around.
Okay, this is just turning into like a pitch of like, oh yeah, I'm all for free market capitalism and transparency. Okay, bro, I get it. The point is, buyers get screwed, sellers make more money. It's very simple.
Customer. And that's what you'll see more of going forward. If a buyer wants to use a buyer's agent, there is going to be greater transparency.
It's not greater transparency, it's greater cost on the buyer. Now, in fairness, why would the seller have to pay? Well, again, that's just sort of been the tradition in the past. Now, that's over.
Get me a house in this amount of time, you can get this percent versus, if you don't meet any of these things, then I'm not going to pay that same level.
Yeah, I think it remains to be seen how this is going to shape out in the open marketplace, right?
Yeah.
These new rules aren't going to go into effect until sometime, at least over the summer.
I mean, my only hesitation with any of this is I could have done that before.
Sure.
If I was aggressive enough with a broker and said, here's what I'm willing to pay.
Yep.
And here's how this is going to work.
And sellers did do that.
There is no obligation to use a real estate agent in the United States. There's no obligation to pay a higher
with
fee.
and without them.
Of course.
Right.
Of course. Now, in New York City, everything's a bit different because we're not members of the National Association of Realtors in New York City, and there is no MLS in New York City.
I don't get the sense that it's better in New York City.
Well, New York City is, remember too that using a great salesperson, great service.
Pitch. Okay, I'm off of this. This is exhausting. Notice there was no real conclusion here on the opinion as to what will happen. It's rather, hey, market transparency is good. Come use our firm in New York, in Manhattan. We'll sell your home. Hey, you know what? Good for you, man. Good for you. The people who win on this, some of the biggest winners are listing agents. He's a listing agent. Great sales guy. Great sales guy. But let's be clear. There was no conclusion on what's going to happen at all from what I heard there. It was more, transparency is good. Hey, that reminds me. That's why you should use us. I love it. I love it. Okay, so Coinbase down 5, MicroStrategy 9.7 as we got a little bit of a BTC rotation here. And, we can show that like this. There we go. Organize that correctly. And look here at Nvidia. Nvidia down about 2.5%. It is rotating down in the pre-market. And it is, excuse me, it is only being beat here on the chip side by ARM slightly, but more so by Supermicrocomputer. Look at, I want to see what their volatility is like. Look at that. Supermicrocomputer down 10%. And that's after being down yesterday, 6.3%. I'm going to look at the volatility on this sucker. Volatility's not actually that high right now. That's weird. Wow. Vol's actually a little low. Oh, SMC did an offering last week. Did they do another one? Oh my god, they're doing it again. I mean, it's smart. I thought they did an offering last week. Maybe I'm wrong. Huh. Anyway, yeah. 2 million share offering. They're trying to do it at the top. That's funny. They're smart. That's exactly what you got to do. Share another one today. Yeah, good call. Gas prices looking to be fun for spring, summer. You said summer. Summer surgery is tomorrow. She'll be fine. She'll be fine. Don't worry about J-Pow going to swoop in and hold rates tomorrow. Bullish. You're bullish because you're not worried about J-Pow is what you're saying? All right. All right. Somebody here opened a 10 call on SQQQ now yesterday. Ooh. Well, the opening would say you're doing well. 65 bips down. See if it holds. Any opinion on REITs? I think it depends on who you are. You know, I think for people in their wealth building phase that are willing to take more risk and have higher earnings power, typically don't need dividends or yields from REITs that are you know, as I would say REIT yields are often relatively safe, with the exception of obviously what we saw in office. But you know, a lot of people can make a lot of money investing in growth, but they could also lose a lot of money, and that's why that earnings capacity is very important. So you can offset. You know, I was thinking about this. Everybody looks at Warren Buffett as a wonderful investor. I do too. I think he's great. But what you notice is, I think first and foremost, he was a big fan of operating, well, not so much being the operator, but looking for really great businesses that he wanted to have ownership in, and then hiring the right people to manage those businesses. So it seemed a little bit less of, let's go find random companies in the stock market, and more of, let's get ownership in really great businesses that we want to own. You know, that's why it started with the local, you know, mill, Berkshire Hathaway, or pounding on the door of Geico to get ownership in the company. You know, now you look at some of the names, like purely owning NetJets. I mean, it's brilliant. These are great businesses, great quality businesses. It's kind of neat. So, point of that is that I'm trying to make is, I think it's really valuable to look at your investing career and balance that with what are you also doing to make sure that your top line is as high as possible. That is your revenue, at the same time as what kind of business ownership do you have, or are you building? You know, even if you're an employee, you could have a side hustle, which is sometimes a great way to have a side hustle. Big fan of that, because you have the, you know, anti-risk of having a W-2. You're getting paid no matter what, whether your business succeeds or fails. Your side hustle. So I'm a big fan. Anyway, okay, sorry. Little Warren Buffett chat there. I thought was really interesting. Right. So, well, yeah, and then businesses grow. So of course you have the exponential growth over time. Yes, but again, you compound those two things, right? So it's not exponential growth with being exposed to just the market. It's specifically picking cash flowing businesses you want to be a part of. Ooh, thoughts on commercial real estate turnaround? I think it's going to take time. Going to take some time. Let's see here. What if Powell surprises us all and cuts tomorrow? There's no way. I think there's like a 1% chance of that. I mean, I can tell you what the market's rate is. The reason and crew don't want to, you don't want to take the market and dick around with it too much, because what you'll end up doing is leaving the market more doubtful about everything you say, and uncertainty leads to more volatility and things breaking. Yeah, there is a 100% chance of no cut tomorrow. That's based on the futures market. It's been that way for the last couple days. Last week there was a 2% chance. So, yeah, you should be terrified of Jerome and the Fed CBDC. Well, if you're out of cash, it's not a problem. If you buy ownership in businesses, and if you buy real estate, you're good. See, I'm actually a big fan of diversifying into real estate, mostly just because even 50% exposure to like growth stocks can be really painful in a downtime. And real estate's usually on a different cycle. Not always, but often on a different cycle. You know, real estate was still bottoming for 2 years when the stock market had already bottomed in 2008. So when you think about it that way, you've kind of got a cycle hedge, being 50% exposed to real estate. You know, so for the person who was asking about REITs, so for somebody looking for diversification, I think it's great. You know, I don't think somebody should be 100% exposed to stocks. But that's my take.
You know, versus the S&P, which is about a 3.6. I mean, it's really the best valuation we've seen in the last couple of years on a forward-looking basis. And so that might seem odd given the run-up, but the company continues to do well. You know, technically, it's a great shape. You know, I'll simply wait until we see evidence of at least a stock making new multi-week lows and/or a monthly low before saying, okay, it's time to move to the sidelines. The story continues to impress. You know, we've managed to exceed expectations wildly. They still have over a 90% market share. And really, the only thing that's limiting Nvidia is really the supply constraints of all these, you know, people on the sidelines, and they're not sure if they want to move because of the B100 or stay, you know, really where they are. But, you know, my thinking is, you know, whenever anybody is sort of caught off guard like this and we haven't had time to catch up, you know, as the saying goes, sometimes when the horse runs out of the barn, you have to go and catch it because it doesn't come back. And so, you know, this story, very similar in that regard.
That's a good one. It's like after, you know, when it's already left the barn is the one we normally lose, but that's right. So let me.
In other words, you know, as you remember, you know, the infamous Carl Spackler, you know, I keep buying. I don't think the selling is going to come around for quite a while. You know, we can go with that as well, if you'd like.
Did you hear that? He just did a Caddyshack. The guy's soaking wet, and he goes, "I'd keep playing. I don't think the hard does." There's a glow. There's an Nvidia AI glow everywhere on the markets, isn't there? Right now, that's part of the firm tone for the Nasdaq, right?
You're 100% correct. I mean, any company that even affiliates itself with AI in any capacity certainly has attracted investor interest. I think this is a, you know, secular wave that really is going to be very difficult to fight. So if you can't beat them, join them. I think that really any sort of pullback that we do get, and there is a possibility from really April into May, lines with a lot of my cyclical composite projections. But, you know, I sense that it's still, you know, premature to try to fight trends based on, you know, as we talked about, being overbought or having a large, you know, price, you know, alone. So.
Yeah. All right. Talking about being overbought. JP Morgan's survey shows that investors are increasing their short exposure. You've got clients doubled their outright shorts, which cut net longs in half. This is coming at the same time as the greed and fear index. Is this surprising? Greed. And 1 year ago, it was at fear. See? Just invest when that says fear. Let's look at the timeline. This goes back 1 year. You can see lots of fear over here in October. Fear last year. And you got to extreme greed around the summer. And you're at pretty much greed now as well. Market momentum is at extreme greed. Stock price strength, extreme greed. Breadth, which is the number of stocks going up, greed versus down. Put calls, greed, market vol, neutral, safe haven demand, greed, extreme greed on junk bonds. Crazy. Crazy. Now, so with that, let's see what else we have going on here. Let's see. This is Tesla down about 155 in the pre-market. Supermicro's down about 11. Nvidia's down about 3. Looks like the pain is continuing. You've got ARM down about 3% as well. I think today might be a little bit of a rough day. You know, think about how nasty today is. Like, let's pretend for a moment you could not see any stock share prices. And what I want you to say or think, if somebody comes up to you and says, hey, tomorrow, Jerome Powell is going to give you an update on when he's going to cut rates, and we think he's going to give us a worse update. And yesterday was the Nvidia conference introducing a new chip that everybody was waiting for. So in other words, you had a buy the rumor, sell the news potential, and you have a lot of uncertainty for tomorrow's meeting. Tomorrow's not an exciting meeting. What do you think stocks are going to do today? Who knows, but I think the answer is down. All right, so let's see here. Okay, so what else here? Well, oh yeah, I wanted to read this. I saved this. I thought this was really cool. Hold on one sec. So, Bloomberg economists think that the Fed's actually still going to maintain the forecast for 3 rate cuts, but instead of giving us any kind of rugging on how many rate cuts, they think they're going to lean towards implying that they're not going to cut until July. I agree with that from a strategic point of view. I think that July makes sense, but I do think they're going to revise the amount of cuts this year down. They did suggest that several members may update their estimate of R stars, the neutral rate, and potentially push up current rates in the dots, but that the average would still remain the same, in line with about three cuts. And that the upside surprises in the intermediate period to inflation have been tempered by cooler economic activity. So you've kind of got this mixed outlook where, yes, you've got some elevated inflation, CPI trending back up, a little bit of warmth in some of the jobs numbers. Some of the other growth numbers like GDP, retail sales, and the adjusted growth numbers for jobs, like what you saw out of California, posted about that over on EHAG. These were doing a little worse, so maybe a little bit of a balance. What do we got? Who's this? What does Judy have to say?
Judy, let's say we don't give credit to the Fed. Is it just the end of supply chain issues, and it was transitory all along? Is that your point?
My point is that if the Fed is going to talk now about possibly cutting rates, they're going to have to disavow their model, because the economy has grown, unemployment has stayed down in spite of what the Fed was expecting to happen by raising interest rates so fast. I think the model does not adequately take into consideration the impact of people working and the impact of economic growth. Neither of those two things are inherently inflationary. And if anything, what the Fed is doing is hurting supply by affecting business investment with high rates, and they're contributing to the fiscal excess, which is the real villain behind inflation, by increasing government debt financing costs.
They're in
anger.
I don't know when the Fed is not.
I love it.
Kind of.
I love it when people are mad at the Fed.
Judy, it's tough, and I don't know what did you think of if former President Trump were to be reelected? What did you think of the 3 possible candidates. I saw you mentioned in a lot of the articles, but the three that were mentioned with a search conducted by Art Laffer was Art Laffer himself, and I think our friend Kevin Hassett, or the other Kevin Warsh.
Well, I don't know if that makes me an honorable mention or an also ran, but being in the top 5, I guess, being considered, I'll take those odds. But I would say that I have tremendous respect for Art Laffer. He's really an iconic figure for me because he was the intellectual firepower, together with Robert Mundell as the macroeconomist, that supported the Reagan supply-side pro-growth economic agenda, which proved very successful. I think Kevin Hassett did an excellent job heading up the Council of Economic Advisors and continues to be a very effective advocate for the kind of pro-growth policies I support. I don't know Kevin Warsh well, but his background, he came up from Morgan Stanley. He was in mergers and...
Art Laffer, by the way, is a big, or Kathy Wood absolutely loves Art. He's a great guy, from what I hear.
He advises some pretty smart people in the investment community too, with what he's currently doing as well, and he's definitely the most handsome.
By the way, I agree with her when she says you hurt business investment, which hurts supply chains with these rates, and then you also kind of encourage the government to spend more money, not only because of higher interest rates, but also they're more sort of like, let's stimulate, let's give money. Like, look at California. Yes, let's give inflation relief checks. Stupidest thing ever.
Chair Jay Powell to do at this point in time.
Well, if you boil down the supply side formula, it is stable money and low taxes. So I think he, as I would, and I don't mean to speak for Art, but I think that the problem is the constant ratcheting up and ratcheting down. I would have started a bit earlier after we saw inflation in July of 2021 instead of waiting until March of 2022 for liftoff. But by December 2022, when they got to 4.25 to 4.5, I would have stopped. At that point, you've normalized. The zero interest rates are no good for capitalism. So at 4.5, it's reasonable, and that's when the Fed should quit micromanaging. It should let markets and price signaling sort out how to reconcile demand and supply for loanable funds. So I think the Fed is too activist. It's the egocentric predicament. They think they have to be always involved in economic performance.
Right. And we have a pretty good economy without the Fed. They could get down there and there'd be no harm, no foul. Judy, it wouldn't be hard to get to 4.5. I know they went up too far in your view, but they could make good on that, couldn't they, if they got down to 4.5?
Well, not now. Not now.
Too late.
Because now they're not only saying that we won't cut until we hit 2%, but they also use that tool of paying big banks to keep the money sitting dormant at the Fed. And I think if they start to let that loose and make it not such a lucrative deal for the banks, that money, that liquidity goes into the economy too fast.
Right. Okay. Very good. All right. We're running somehow running out of time. Judy, we'll do this again at some point. Hopefully. I
like her. She's good. That was very insightful. I appreciated that perspective. Yeah, and it is interesting that Kevin Hassett. We've seen him on the what's it called? Previous Trump administration. It's not a surprise to see him come back, and then Art Laffer. It's a good choice. Those are some good choices.
Because I have nothing to bet on. Just make sure you join us tomorrow. Squawk on the Street coming up right now.
All right, yeah, they're switching now. All right, but yeah, I think she's right to be upset with Jay. Good old Jay. Come on, Jay. What are you doing? Jay Powell. I think it's an interesting perspective as well to wait at 4.5%. But clearly we're a little higher than that now. All right, let's see what I want to see what the 5-year break even is doing. Let's see here. 5-year break even. We are sitting up at 2.43. We're at one of the 3-4 highest levels in the year. Let's look at the Goldman Sachs Financial Conditions Index. At the same time, we've got Nvidia here bobbing around. It was down as much as 3% for a moment there. It's now down about 2.4. Goldman Sachs Financial Conditions. Let me see here. Okay, come on. Goldman Sachs Financial Conditions Index. With rates going up, we should have seen a move here. Come on. Darn thing isn't loading right now. All right, whatever. I'll get to the bottom of it. But in the meantime, we've got the Qs over here are rising. We were down as much as 75 basis points there on the Qs, and now we're sitting at 50 basis points. So you've got a bit of a recovery going into the open here. So that's exciting. Not only do you have a bit of a recovery on the Qs, but you've got a little bit of a recovery on some of the interest rate sensitives. Tesla, a little bit better. Still MicroStrategy, ARM, still moving down. Mostly, we are seeing a little bit of a Bitcoin recovery, though. It's actually, look at that. Had a pretty, on the 5-minute here, pretty solid downtrend. Not actually as easy to draw here as I thought. But anyway, you're kind of breaking that trend right now. Delete that. You can see that trend being broken slightly, so we'll see if that holds. SoFi down another 2% here in pre. And it looks like, let's see what the suits have to say for us this morning. We've got Canadian bonds rally on cooler inflation. Yep. That was good news. We did actually see some green candlesticks when the Canadian numbers came out. Let's see here. Easy money is dead. Ouch. Oh, that's a reference to Japan, though. Going from negative. They just had their rate hike. All right. Let's see what Jimbo has to say this morning. Oh, he must be at the Nvidia conference.
Means get into some detail if you can. I know you. I'm sure you will with Jensen, obviously, during your interview. But sort of give us a sense here as to the leap that's been made.
Sure. I think that you hit on something that's really important, which is it's not just a chip. It is a platform. Now, what does that mean? It means it's filled with software. What does that mean? It's recurring revenue. It's not one-off. You get in their ecosystem. You stay in their ecosystem. There are a lot of people who say this is a defensive move. I say it's an offensive move because what this Blackwell can do is use video, use text, many different languages, and understand. So you can imagine it can understand. Initially, it'll understand between a zebra and a horse. In the end, it will know more about zebras and horses than we do. I have to use an animal kind of imagery because this is something that really, Jensen spent a lot of time talking about how it understands video. And if it understands video, then it can do things that we would desperately need in society, which is like have robots to be able to do a lot of jobs. We need them. To have people be able to design things that they've never been able to design before by, yes, David, I'm going to use it, many times mentioned digital twin. A digital twin means that you basically...
He's right. Gosh, that was mentioned so much. And I was just bagging on Matterport for using that phrase. It's so exhausting. I'm tired of hearing digital twin. I think it's bad marketing for Matterport, but for Omniverse, I get it.
He described it as the final frontier, and yet that's what Blackwell will do better than anything.
Yeah, I mean, I don't know where to start with you, Jim. You mentioned robots. I know he had a bunch on stage with him, right?
Yes.
You know,
yes.
I've talked about them in the past. Obviously, Tesla's, for example, and what they've been able to do, and how advances are being made in terms of the manipulation of hands, for example. What'd you see up there? What are the expectations? Does that become a real product line in some way?
Well, I caught up with Jensen after yesterday when I saw him later on at an analyst confab. And he told me that there was a green robot and an orange robot. The green robot wanted to hog the show, came up, was very aggressive. The orange robot was recalcitrant, stayed back, actually stubborn, did not do what Jensen wanted. Now, the problem, David, with this is that actually may be true. You know,
All right, well,
the
you're not making
robots
me
are
feel any
thinking.
better. Robots are having personalities of their own and not doing what we want them to do, so we're already there. It's already the Will Smith movie.
Yeah.
Didn't take long.
Yeah. Look, I mean, there was no explanation for why the orange robot hung back other than just a decision to make it so it was not going to obey Jensen. It was the first time he had met the two robots. They didn't know him. He didn't know them.
Okay, this sounds absolutely ridiculous, Jim.
Some of it is tongue-in-cheek. But is there any doubt that you and I can't easily be replaced by the green and the orange robot once they have learned what we talk about? Do you think that we can do better than they can?
I don't know. I do think we will be replaced, or all of our consciousness will be uploaded to the cloud anyway, and then they'll just download us back into some sort of robot.
Right. Well, what's the contract
We're going to be doing this show for a
What's the
millennium.
contract talks?
Yeah, we'll be doing this forever.
How much do you think the robots cost to talk?
I don't know.
I mean, once they're bought?
Okay, I can't listen to this trash. This is ridiculous, Jimbo. This is absolutely ridiculous. I will switch to Bloomberg. This is like so stupid. Good lord. Little pre-program. What is this? This is not what I wanted. I'll just leave it there. Hold on a sec. This isn't... I didn't change anything. What is this? Where's Doomberg? Where's Doomberg when you need them? Oh, then they're not up here at the... Oh, there it is. Okay, yeah, they should have been up there. Oh, no. I can't even click on it. What is this trash? Dude, I don't want to go through this bullshit. Just play the freaking show. God. I just hit escape. I don't want to answer your survey.
Particularly for financials, as you said, moving into positive territory is a significant tailwind. So we could, I think this is none of us are really surprised that either the JGBs or the JPY, the FX.
Okay, I don't really want to hear about Japan either. I get it. All right, Japan. Got it. No more negatives. Bye. All right, regarding Bitcoin. Talk regarding Bitcoin has to, and we were talking about this yesterday a little bit in the Tesla video. You've got, I'm not a Dish user. What are you talking about? DirecTV isn't Dish. It can be. It used to be. Now it's hardwired, baby. It's when I got bought by AT&T. Duh. Anyway, yeah, no dishes. Bitcoin, I grew up with dishes as a child in Florida, and there were way too many clouds in Florida for good dish TV. Bitcoin, let's see here. The $25 billion Grayscale Bitcoin Trust posted a $643 million outflow on Monday, the most since it converted into an ETF on Jan 11, data compiled shows. Earlier, strong demand for 9 new spot Bitcoin ETFs that went live at the same time had more than made up for a spate of GBTC exits, but those flows into products from titans such as Fidelity Investments and BlackRock are cooling. Yeah. Grayscale Bitcoin ETF posts record daily outflow. Yep. I mean, that makes sense. Their fees are crazy, right? They're at like 150 basis points. A lot of the other Bitcoin ETFs are at 0 for 6 months and then like 20 to 25. So... interesting on the flows. And then usually you get supportive buying in the middle of the night. You know, what we have seen since sort of the pump, so to speak, what we've seen is at like 3 a.m. you start pumping frequently. Yeah, look at this. Look at this. So over here, going into all-time highs, right here, 3 or 4 a.m. Eastern time, pump. Where's another pump? Here we go. What is this? Look at that. Midnight. 2 a.m., 3 a.m., pump. What do we have over here? Early morning hours. It's always those morning hours. You do have it extend during the day sometimes. But it's like somebody's trying to get like trading started in the day. You know? It's like, oh, let's here again. Look at this candle. Look at this. 3 a.m., boom, 4 a.m., it's up. You see that? It's almost like you've got some fund managers or hedge funds or whatever who've put together some kind of program that purposefully buys at 3 or 4 a.m. So when people wake up, they see green and they too want to buy. Huh.
From the market, I think it's a lot really depends on how this, if there were to be a change, and how this change is messaged both in the statement as well as in the press conference. That will be really critical.
Okay,
So
if they go from 3 to 2, Vishy, what does the bond market do? Because, again...
No. This is not just people outside the U.S. Because what you have to think of is you have more trading activity going into BTC in those hours than you do during market trading hours. In fact, we threw up a chart the other day showing that most gains were happening in the overnight hours, not during actual trading hours. And so your volumes are way higher during the U.S. trading hours.
10-ish basis point moves in the long end of the curve.
So I don't think you could just weigh that it's other countries have significantly more volume all of a sudden and therefore buying power. Oh, it's just, it's time zones. Really? Okay, then maybe everybody in all the other countries, they're only net buyers, and the U.S. is trading normally. I don't see that.
And certainly, with no shocks is what markets want right now. Markets want slow and steady, as was mentioned by your other guest, well-telegraphed move. That has been the order of the game. No surprises. Nobody wants to inject that kind of volatility. So yes, nothing drastic. I think what will have to be the name of the game. And as we can see, though, markets are more focused on corporate earnings and corporate rhetoric than they are on some of these macro indicators, unless it's the strong growth and the low unemployment that we've been taking a lot of comfort from. So I'd say, yes, nothing too surprising, I think, is the order of the day.
Okay, well, we'll dig into the corporates in just a moment when we dig into Nvidia, the daily check. Ethan, thank you very much. Ethan, David, and Vishy Tripator stay with me to talk through the markets. Let's go under the hood of the bell. Ahead of the bell, Abigail Doolittle is side by side with me as she is every day. Abby.
Manus, let's start out with that daily check on Nvidia. And we're seeing one of the rare down days this after been called.
Oh, well, I screwed up her mic.
So we're just going to come back to you, Abby, in just a moment. We've got one of those classic live TV. We've lost the sound. We had a lot of action. But as Abby was just saying, it is one of those strange days. You've got Nvidia dipping. We'll dig into that story in just a moment. The AI event.
Yeah, that wasn't much of a surprise, though. So, yeah, Max, this is actually interesting. I want to take a look at this. I think this is a good reference here. So let's... Oh, did I do that again? Hold on a sec. Why do I have to do that all the time? There we go. Okay, give me 1 second here. I want to show this off. So, Max just made this point about this phone maker that introduced a car, and it's this company here, Xiaomi. So, Nvidia announced that EV makers Great Wall Motor, Zeekr, and Xiaomi have adopted the Nvidia Drive Orin platform, and this is January 2024, to power their intelligent ADAS. And then, I don't know how much of this is manipulated, but here's a channel called Tesla Driver. Let's see here. See if I get audio on this. No, I can't. I haven't figured that out yet. That's all right. But anyway, actually, I don't even know if they're... whatever. I'm sure there is some kind of music or audio, but we don't need the audio. But apparently this is NVIDIA's... Oh, what, did it crash there? But that's all on self-driving. Yeah, it probably goes into takeover mode there. Why is the video so jerky? Oh, they're purposely going frame by frame here. I mean, that looks a lot like Tesla. This visualization over here. Look at that funky car and the person coming out right here. Yeah, they're going frame by frame here on purpose. It looks like it's moving a little bit. Barely, though. Should have changed lanes. Jeez. I mean, there was nobody next to him. But it did navigate around him. And that's pretty impressive. This is Nvidia. That's wild. Why is the whole thing so framey? Maybe if I speed it up, it'll look normal. It's almost like they took pictures. This is like a stop motion video. Gosh, that's annoying. Yeah, but looks a lot like a Tesla. Time lapse, yeah, exactly. But this is very interesting. It's hard to keep intellectual property when engineers move jobs. Yeah, no kidding. Yeah. So that, I guess that's all Nvidia driven. That's not bad. I mean, again, we could try a different search here. Let's try. Hold on a sec. Let's go with. Let's see here. Okay, let's go with Xiaomi. I'll just try autopilot and see what comes up under it. Aren't that many reviews? You do have Consumer Reports, but I think they're a little bit knuckleheady. Here we go. Here's one. So this video is called Chinese Xiaomi SUV EV Automated Self-Parking and Driving to Rival Tesla. This is the self-parking demo. Oh, this is the same video, though. Oh, they're only going to show that one person's video? So then that makes me wonder if that's more of like the chosen official position, now that we're seeing that everywhere. But it is using Nvidia's technology. So it's very interesting to see that. Announced its first EV, the SU7, built on the dual-drive Orin configuration for highway driving function. Highway driving function. So how did they just get it driving on the street roads? Ah, here. Available for major cities once deliveries begin. Ah. Okay. Interesting. End-to-end algorithmic structure dominated by large AI models. Sounds a lot like version 12. You know, we were touching on this yesterday. It's not even Thor yet. You know, Orin is the current version. That's interesting. All right. What else? So let's see here. Let's go. That's a picture of the chip. I don't know why do you make the picture of the chip clickable? That's funny. All right, let's jump in over here. So let's see what we have. What do we have? We have BTC now 63.2. On the 30-minute, we're starting to see some green candles. On the 5, though, we're starting to go red a little bit again. Nvidia is actually recovering a bit here, and so are the Qs. Down 50 basis points on the Qs. Tesla and Enphase down a little, about 1.5%. And a lot of nominal movement here. Let me see if Apple's moving at all. Yeah, take a look at this. Apple up another 40 basis points. So you're moving in this trajectory on Apple where you've just bounced off the 169 and you've essentially gone straight up on it. I guess you shouldn't say straight up, but it is moving pretty nicely. So that's Apple. What else? Somebody here says Hood, Robinhood, down 5%, 4.6. It's had a pretty crazy rally. It's down at 1736. Nvidia doesn't have a product out for 100% economy or autonomy. That's why. Well, I mean, technically nobody does. Nvidia, BYD partnerships, not moving the needle for Wall Street. Very bearish. Not moving the needle on Wall Street is bearish for Tesla. FSD is how Tesla plans to get margins back, yet Wall Street doesn't appreciate it. Well, you gotta see, here's the thing. One of the concerns that I have with full self-driving stacks is that when every car has this sort of technology, can you charge extra for it? Or do you just have to build it into the price of the car? Right? Because think about it. In the future, you're not going to buy a car without FSD, so it may as well be considered as part of the price of the car, and then you're going to want to finance it, so you get it up front. Exactly. Who's actually... Oh my god, this guy's name is Booger Eater. Stop. Oh, no. I can't even drink my coffee anymore now. Who's actually generated revenue from FSD? Right. Well, I mean, Tesla has. At least they've recognized some of their revenue, you know, hundreds of millions of dollars in a quarter sometimes. So Tesla has. But the question is, has that stagnated, right? That revenue recognition. And the problem also is that there's this idea that maybe they're trying to pump some of the EPS by recognizing some of that FSD revenue. Because, oh yeah, we're at version 11 now. Let's recognize. So, yes. Yes, this is a good argument, Mike. Tesla has been begging for an FSD partnership for a year now. The fact that Nvidia beat them to it shows the sign of the times. Well, Nvidia has always been the traditional first partner. They're not a car competitor, and Tesla partnered with them at first as well. But you are right. You are right. Will the SEP sink the market tomorrow? I think so. I think people are going to load up their hedges today for it. So, what else? Jensen will be on CNBC at 7. Is that true? Well, in the 7 o'clock hour. They're going to make you wait. I promise you. If he comes on in that hour, they're going to make you wait until like 7:55 for him to come on. What puts are printing today? Ooh. Let's think about that. Well, Supermicro Computer on their offering. You've got, you know, ARM is an interesting one. I think ARM is, especially with the lockups that have expired now. You haven't started seeing the selling, but I think it's just a matter of time, and that's okay. I think ARM has some real potential of moving very rapidly to the downside. I don't know if today's going to be that day, but I think there's some potential given that it's already down 3%. It's already down almost twice what Nvidia's down, and it didn't have an offering like SMCI. Another one that a lot of people don't pay attention to, but I'm watching is this. I want you to see this. So this is Carvana. I hate their financials. In fact, the only reason they went profitable in the last year, in 2023, is because they recognized on their income statement the burning of their bondholders. So they took an $800-ish million gain on burning their bondholders, and that's the only reason they're profitable. Otherwise, they'd be losing money, and their business is shrinking. So I think there's some fundamentally flawed issues with Carvana. On top of that, what's funny is I didn't even have the fibs drawn on this. And I was looking at this going, oh, I wonder what the fibs would look like if I drew the fibs. So I go draw the fib. It's almost a perfect rejection. So I think your upside limit is about 90. But I think your downside here is substantial. And I think if the market moves down broadly, Carvana is an interesting play because nobody's really paying attention to it right now. But it will be one of those, I think, that people will dump if the market moves. So volatility is pretty low on Carvana right now. Let me take a peek to verify. Let's see here. Come on. I'm trying to get the volatility here. Yeah. It's pretty low right now. Pretty low volatility. It's lower than the 5-day moving average, 30-day moving average, 50-day moving average, 100-day moving average, which makes it an interesting play for potentially buying puts. You've got, so ARM I think has a short. Carvana potentially is more of like a market-based short rather than an AI-themed short. You do have AI that would make probably a good short today. We'll see how trading goes. You've got ARM right here. And then, of course, you have... What else? From AI... Ooh, look at AMD. Down 3.8%. Yeah, AMD was moving down more than Nvidia was moving down. Yeah. All right. So, we're now getting close to the opening. Good old opening belly welly. It's going to be kind of interesting. We'll see how it goes. I'm excited. Ready to be entertained. It's like those memes. Are you not entertained? So, yeah. All right, good. So let's take a peek. What else is going on? Let's see. What do the Doomers have for us? Doomers? Nothing. They're on a commercial. How lame. They always do this. It's like right before the bell. Nobody wants to do it. Nobody wants to work. Hey, look at this. All of them. Got to get their commercials in right before the bell. Losers. All right. So let's see what else is news. By the way, have I recommended you get life insurance? In as little as 5 minutes, go to metkevin.com/life. Apple Pay or Android Pay for it. It's really easy. All right. So, commercial real estate. What is this? An obscure investment product used to finance risky real estate is facing unprecedented stress as borrowers struggle to repay loans tied to commercial property ventures. Commercial real estate collateralized loan obligations, CLOs. In just the last 7 months, shares of the troubled assets have tumbled. Wow. $80 billion markets trying to restructure their loans. That's not good. More financing problems for good old commercial real estate.
So you think
Ben &
they would
Jerry's
be
tastes
better
like
off
coal.
just as beauty and well-being, personal care, home care, nutrition, that's it. Get out of food entirely, you think?
They're doing what Procter did, which was very smart. It raised Procter's margins. It also, of course, raises its PE. It's a very smart move. Unilever needs to do this. I question why they didn't do the whole food. What is it? Why did they have to do just one part of the food? What is that about? Nelson Peltz in the boardroom pushed for all of food. But David, Nelson Peltz, I don't know. I'm sure you have something to say about him later. I got to go see Jensen.
All right, well, we'll talk about Disney in a little bit later. We are the largest per capita consumer of ice cream, America.
Here we go.
Just so you know.
NASDAQ's actually trying to push green on this. You're only down 46 bips right now.
Phenomenal. Wow, those people really have game. They're gamers, those people.
Yeah, very loud here. Opening bells, of course, right now. Take a look at the real-time exchange. So we got more red on the board than we had green. Here at the big board, beauty products company Coty.
Maybe that'll drive the stock price up.
120th anniversary over at the NASDAQ Gentex. That's the supplier of dimmable windows and mirrors to the automotive and aircraft.
All right, there you go. Down about, what, 55%? Let's take a look at the market. How's it moving? So you've got Nvidia. You got a red candlestick here, down 2%. ARM down 4%. Short. You've got Nvidia, 2.3. Red candlesticks growing. BTC still got the greens. You've got Apple turning red, trying to. Robinhood's rising. Q's down. Trying to figure out what direction to go on the Qs. Day before Fed meeting. Tesla's rising. Enphase down about 1. You've got, what else here? Matterport, they're down 2.4%. Affirm, 2.5%. Google's actually positive 63 basis points. Riot Platforms, they're down 4. Let's take a look at the losers here. MicroStrategy, 13%. So MicroStrategy's down a chunk. Super Microcomputer down 10. Coinbase actually down, but also recovering here. And, yep, looks like it's recovering a little bit. Tesla gets a red candlestick. Big fat red candlestick there. Enphase just got a green candlestick. Q's going straight down. Load up the shorts. That's the day before the Fed meeting. Come on. What else? What's rising? Nvidia, yeah, it's bobbing around left and right over here. ARM's down 4.5%. Nvidia got a fat green candlestick there. Embraer, look at Embraer. Good old Embraer. Nobody pays attention to Embraer. Yet Embraer, that sexy beast, up another 3.3%. Dell, after its shout out twice yesterday, is up about 1%. Didn't move the stock as much as the last time. Let's see how BTC's moving. Nope, still got a few greens on BTC here. And then let's go to Wingstop. Now, Wingstop doesn't really move, is the thing about Wingstop, though. All right, let's listen in here for a moment.
It's not meant to do anything other than be more productive and smarter, which the world needs. It's going to produce less waste in the end. There's a great, the cost of ownership is lower than what we have, and it's faster, smarter. How can we not want faster? How do we not want drugs that can be developed in maybe 3 months instead of 3 years, where we have just a short time of patent protection? So therefore, the drug companies don't even attempt to go after hard things. They will go after the hardest illnesses because of this. They shy away. They go on the easy illness, David, because it takes too long. This is the end of that. This is the end of factories that waste so much that we have to question.
Well, it's the beginning of the end. Let's be real.
A lot of ways we think. And it's all positive. It is. It's positive.
Okay.
Say something.
Well, I'm listening to
Say
you
something.
and thinking about it. And I'm not sure I completely share that, but I'm trying to think of this world you're describing with
productivity.
Nvidia's.
Do you think it's positive or negative?
GPUs.
Do you think that the loom? Did you favor the seamstress over the loom?
We're going to have a lot.
Where were you on the steam engine?
We're going to have a lot of. Fulton, I think, is buried right next to Hamilton, isn't it? We're going to have a lot of free time. We're going to have a lot of free time. I'm sure what we're going to do with it all.
We will be so much smarter, and we will be helped by, and we can feed it video. It recognizes everything.
We're going to live forever.
And David, it has common sense.
Waiting on us.
They have common sense. The robots have common sense. They have common sense. We can teach
when
them
are they
common
going to
sense, and then
decide
they
that
can
we're not essential?
No.
That's when are they going to decide that why are we around?
No, we program them. We tell them whether we're essential or not. They don't tell us if we're essential. They can't tell us that
even when they have intelligence greater than our own.
David, there is no such thing as Soylent Green.
It's people, Jim. It's people.
Could you do Edward G. Robinson for
No, I
us?
can't do Edward G. Robinson from the Ten Commandments and then put him in Soylent Green. I can't do the same thing. All right, let's move on.
All right. But
let's
anyway,
stay in the
David,
same area.
It's hard to change everything. It's hard to change everything overnight.
You and I will continue until we're replaced by robots, we'll continue talking about the future. But AMD shares are also getting hit down 3%. What you saw yesterday, impact on AMD.
Well, I mean, look, AMD has chips, okay? But you need the package. You have to have thought added to the chips. You can't just send a chip to some company and say, hey, listen, go figure it out. You have to have Jensen's team come, explain to you the software platform.
All right, Jimbo. Okay, Jimbo. So, okay, Nvidia, you've got 1.7. Looks like it's trying to head down again. ARM continues to move. Apple just turned red. You've got MicroStrategy's at 11. Tesla's down about 1.3, turning slightly green. You have, let's see here. By the way, if you're a course member, I just sent out another trade alert. If you're not a course member, sucks for you. Palantir is down 2.4%. But yeah, I know sometimes if you don't have your notifications on, people like me to kind of verbally say it, but you could also go turn your notifications on. But anyway, MicroStrategy's recovering a little bit. It's an interesting one. So bit of a recovery here. I think that's because you are seeing a BTC recovery a bit. You've got a slight recovery. And this recovery has been happening for about an hour now. No, 2 hours now. So you've had about 2 hours of an uptrend here. And let's go to ELF. Somebody's Max here says short ELF. Really? That one's been doing so well. Like, Wingstop is the overvalued crappa-rappa. Okay, what other moves are we getting here? So, Enphase 121, Tesla 136. Let's see. Yeah, I opened 3 shorts yesterday. I did a little triple short strategy, which we were talking about earlier and this morning as well. Topics to short, talked about it yesterday. Because I thought today would be a buy the rumor, sell the news, and then and then Fed meeting tomorrow, obviously. My question is, I want to see after 15 minutes if we're going to extend losses or if we're going to recover. So, AMD says the answer is extend losses. Bitcoin says it's recover. Oh, there we go. AMD and Nvidia pushing down now. And ARM, yeah, couldn't keep it up there on the green candlestick. Enphase actually isn't doing that bad today, which is surprising given that you've got Fed meeting tomorrow. Your trade was spot on yesterday. Thank you for saying that. Let's see here. Let's see. Wingstop because customer service stocks. I had the same problem. Hate it. Yeah, email us at staff@meetkevin.com. Training systems. Make sure you get that fixed today. Kevin, will you please look at Macy's? Offer at $24. Why still 21? Well, you know, anytime you have a difference between an offer that somebody's willing to pay and the actual price, well, A, you have an arb opportunity, but B, it's usually because the market is pricing in a chance that you're not actually going to get the deal, right? So you price in some kind of risk, whether it's regulatory or whatever. Yeah. Oh, thanks, Rob. Kevin Short yesterday paid for the course. Strong value beyond. Oh, thank you, man. Appreciate that. 15-minute charts look very bearish today. 15-minute. Who uses 15-minute charts? I like the hour. You know, like yesterday I saw some folks commenting on cup and handle over here on Tesla. I don't know. I didn't like the entrance going into this. Like, it almost felt like a little bit more of a backwards cup. But I see what they're saying. They're trying to say this. And then that could imply an up. You'd have to break out through these 2 resistance levels. And usually we see these cup and handles on uptrend, right? and you really have a continuation pattern on cup and handle, this is a long downtrend, and you're on the hour stick. I don't know, especially with the fundamental problems. I don't know about that one. So anyway, oh yeah, look at that, it's getting worse. Oof. Let's go 5 minute here. Nice fat red candle already there. Nvidia. Okay, yeah, Bitcoin's trying to move down now. If Bitcoin continues to move down in this direction, there are going to be some more juicy short opportunities. Q's pretty solid red right now. Straight down. Carvana. I knew it. I knew it would go down like 4 times as much as the Q's. The beta on this is like 3 to 4. And the volatility was pretty low. Yeah, this is good. If you're short. Not so good. If you're long, it's a buying opportunity. But anyway. Okay. Let me see what other news there is. Let's find out. Those trades made me the course back and more. Hell yeah. Let's freaking go. Andy, email us at staff@meetkevin.com. When are you planning to close the Tesla put? Maybe it's already closed. It's trading, bro. It's trading. Like, I closed my Tesla put last week. I was not expecting for it to do a 50% return in 24 hours. But I opened my put like Wednesday morning, I think it was. And I closed it at like 12:50 on Thursday. And then yesterday, people were mad at me in the comments. They're like, what do you mean? Tesla was up 6% today. What do you mean you're no longer short? I'm like, bro, I said I was trading. And they're like, what? You're not allowed to trade. You're either long or you're short. I'm like, no. Like, I'm pretty transparent. But it's funny. I think some people are just very, very mad when people trade. You're not allowed to do that. See, but then you got to really piss them off, and then you got to get calls for the bounce. I should have done that. Look at this. All the tech bros keep going straight down. Yeah, Alexander, you have to be in the stocks and psych one, and just go to the short-term trade alerts, and you'll see it. Yeah, ARM keeps going. Tendies. BTC. Yeah, BTC is trying to trend down now as well. That's going to whack MicroStrategy and Coinbase and them. Tesla now down 2%. Oh, this is entertaining. Entertainment guaranteed. I told you. Entertainment guaranteed. Okay. Far Real says, if you're bearish interest rate sensitive industries like Tesla, do you have the same sentiment towards housing and house hack? No. Mostly because we've already seen that interest rates are not affecting single family. And what they're actually doing is they're creating massive opportunities in multifamily. And so, like, we feel like we're bottom feeding. Like, it's great. I mean, we're cash buyers. So, I personally think that, and this is not a guarantee, it's just my opinion. I personally think that, people who invest in house hack, go to househack.com/2024, read the PPM, if you're an accredited investor, are people who align with the vision of the company, and then also realize that, my long-term goal is putting my entire reputation on that company, house hack, making sure we get to IPO, and it's a big win. Now, obviously, I can't guarantee that, but that's my dream. That's my goal. I'm allowed to have goals and dreams, and that's my baby. I bought that domain, I think it was like 2018 or something like that. And I've always been thinking about doing something like this. It's been a vision of mine since I first got my real estate license. So it's kind of cool that like 14 years after getting my real estate license, it's happening, and it's doing very well. So we think investors are killing it, are going to kill it. But again, you always have to balance this. I'm the CEO. Of course, I'm optimistic. So, there are always risks associated with making any kind of investment. But anyway, QQQs, 88 bips. That's worse than what we had in the pre-market. Pre-market was sitting at, what's it called? 75 at the low. I got my mortgage at 7.5% less than a year ago, single family. Yeah, well, that's the thing. Is like a lot of folks got their mortgages last year thinking, oh, I'm going to be able to refinance next year lower. And rates aren't lower yet. Did you know Warren Buffett owns snow? I didn't know that until like a week ago. I'm like, what? Antique email staff@mekevin.com. Yeah, if you're an existing course member, we can bundle you up, staff@mekevin.com. By the way, the Stack Hack Financial Analysis course, which is actual financial advice, I have 5 videos left to make. That should be done within the next like 24 hours. And what we're thinking about doing something special for course members there, where you can basically bundle up into that and see the financial advice that other people paid for specifically for them, but you could get sort of the whole library. And we purposefully filmed the videos with no private information and made that very clear to everybody up front. So no, everybody knew that this was coming who was involved in it. But it's a really cool opportunity because what we've done is we did licensed financial advice for like somewhere around 50 people and fully analyzed, their situations. And then rather than have the same sort of redundant set of recommendations, what you actually get is these unique perspectives for every various different person. And when you watch all of the videos, you get this really scenario-based financial analysis course. And it's really cool. Well, personal finance would be a better way to put it, rather than financial analysis. But we think it's really, really cool. So I'm very excited about that. But anyway, so stay tuned for that. Okay, so what else? Rates being a higher opportunity for house? Absolutely. It's very nice to let non-accredited investors in. Absolutely. That was a lot of work. That was really hard. And I know we only had that open for about, 45 days or so. But it is, we promised we would do it, so we did it. But good questions here. I always like interacting with the chat. So, I need a course that's purely company analysis. Would anybody actually be interested in that? Would somebody be interested? I'll run a quick poll. And I'll just be honest that, you don't have to, like, I'm not looking to, like, 90% of you could say no, and it's fine. I'm just more curious to see what people think. But what you could do is do some kind of, like, very, very deep fundamental analysis, like, actually, like, the paragraphs in the footnotes of the financial statements. That is an interesting question, Max. I'm going to ask you Q&A. Would you be interested in an extremely deep fundamental analysis only course? Again, I know people aren't like super heavy on. Hold on, that didn't work. On pitches and stuff. That's not working. Hold on, I want to get the sticks again here in a moment. But start a poll. Interested in super deep fundamental analysis course. Yeah. And I mean, if we did that, you really have to go into like, I'm talking like outside, like getting into like where the Goldmans and stuff get their data from, like really going into like, where's the deep stuff? Like where are people getting their insights from and their data sets? That would be the way to do it. That would take a while to put together, but that is an interesting idea. So anyway, I'm running that poll. Let me know what you think about that. Okay, in the meantime, let's get the sticks really quickly. So, BTC dropping more. It's about to be under 63,000. Oh, it's getting worse. Oh man, 3% on Nvidia, 5.3 on ARM. You're trying to recover a little bit on both of these. Apple's red. The Qs are trying to recover. Oh, Tesla's down 3.3%. Wow. Okay, I wasn't expecting it to go down that much. Wow. Nice. Nice. Okay. Those are some big moves there. Affirm's down 5%. These are big old moves. AMD Down another 5%. Wow. Is Hood dumping? Hood's dumping. Now you're going to have to reload the shotgun of shorts. Wow. That's cool. That's interesting. I mean, it makes sense going into Fed Day. I think what you have to do now is you have to watch to see if you get a recovery and then you get the next leg down. See what happens. Like, if you start going negative 1% here on the Qs. Let's look at the TA. Hold on. What's our downside? Going into Fed meeting, if we get a rug pull, 406, 434, 6.5% downside on the Qs. Well, that's not going to happen in a day. If you break 1%, could you get to 2%? Maybe. Let me look at the hour chart on the Qs. So, let's see here. I'm pretty shelved over here. I'm going to do some horizontals. Let's go horizontal. No, none of these are that good. I mean, that one's okay. I go yellow for just like intraday, but we're already there. So that's not useful. Next stop, maybe like a 421, but that's not good either. Yeah, so you're really trying to find your next go-to. I don't know that you're going to get it today. It almost like you'd have to get a slow bleed. What are we getting? Yeah, see Q's popping up again. So now what you got to do is watch. Does this turn around again to the downside? How much does this rally? You know, and then do you pull the trigger on new shorts as it potentially peaks around? I don't know. That's the mystery. Yeah, but Hood took a nice little 6% dumpy doodlah. Wild. Somebody says, Nvidia 900 end of week. Well, it's very common to get by rumor sell news. I mean, take a shot every time I've said that now. But, you know, the question is, does that turn into you know, a rally afterwards? You know, after a small adjustment, you get a rally? Maybe. Did Wingstop lose support? Oh, I would love that. I hate Wingstop. Like, I just have a passion. Like, see, I love Tesla. They're just in a really bad fundamental time. Watch my fundamental analysis overview. It is more of an overview yesterday. You know, for YouTube, we usually don't go like mega deep. But watch that overview yesterday. And, see, I love Tesla. But it's fundamentally bearish in the short term. Wingstop, on the other hand, I hate it. So I'm like really grateful to see this crash and burn. Yeah, Apple's the one thing that kind of keeps moving green. Yeah. So, all right. Any other people who want to vote? Give a little vote in the poll. And, yes. Look at the end of March rally last 2 years. Money managers chase into the end of the quarter. Oh, we'll see. In the future, do you think you could do bond offerings for house hack at a fixed interest rate for 5 years or more? Yes. Absolutely. There's so many long-term things you can do with entities. I find it very entertaining and fun. Tesla down 3%, 2.5 over here on Enphase. Again, if you want to see my trade alerts, a lot of people are really happy. Those were all positive, still are positive right now. And from yesterday's trade, and we loaded up some trades yesterday, and there was some risk thrown on yesterday, and those did well so far. Check that out. Email us if you have questions at staff@meetkevin.com. Want a coupon? We're probably going to do a price increase on the courses. And I think that's going to end up being Friday. Because, let me see here. Is it Friday? I think we have it set for Friday. So if you want to get in the courses on building your wealth, check those out. Go to meetkevin.com. Join me at the event in June, June 21st to 23rd. And I'm going to look at the sticks now while I push this button. And again, if you have questions, email us at staff@meetkevin.com. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than House Act, nor am I presently acting as a market maker. Yeah, Hugh's trying to recover here, so you got to watch this. You can take your tendies on your shorts and reload that shotgun, especially if we break where we were at open. It'll be really interesting. So that's what I'm watching for. All right, folks, thanks so much. We have news. Hey, bro, we have news. What's the news? I see no news. What's the news? There's no news. There's no news. Skeptical until real-world videos. Are you talking about AI? Job openings. What job openings? There's no news. I see no news. Yeah, I don't know, some of y'all are chatting that there's some news coming out. I'm looking. I don't see it. Yeah, a price increase is the news. That's it. That's right. Sorry, bro, tomorrow. You read the calendar wrong, bro. Are you talking? That's okay. I still love you. Still love you, man. Yeah. Tomorrow's Fed Day. All right. All right. We'll see y'all. Good luck. Goodbye.